Welcome back to another episode of the Blockrunner Podcast. I'm your host, William, always here with your co-host, Iron.
What's going on, dude?
On the sticks, we got TJ.
Hello.
All right, we just got done recording a 20-minute video about the NAT token taking over the planet. You're welcome.
Or specifically, Natpool's.
Yeah, Natpool, correct.
Yeah, Natpool.
Not Antpool.
Formerly Antpool, now Natpool. Especially after the second.
Yeah, they've
I mean, they clearly like Nat, dude.
They're like, dude, let's have another party.
Whatever, dude. Well, it'd be nice if they announced, it's like, we got a couple new ASICs in the warehouse. That'd be pretty cool.
Yeah. Say, announce, yeah, exactly. Announce some new hardware. We'll retweet it. We'll contextualize what that really means. They use NAT funds to buy new hardware.
Therefore, furthering the thesis, right?
Yes.
NAT is contributing to the security budget, which,
correct.
Again, that security budget is diverse in its operations. Yeah, it could include setting up new miners.
Yeah.
Could include, parties in Dubai. Why not?
Yeah.
That could be part of the business of being a miner, right?
100%. Why not?
You got to meet up with LPs, liquidity providers, other investor types in order to expand your ops. It's like, dude, yeah, that NAT there,
Yeah.
upgraded our table.
Yeah, what if the $40,000 that they made selling NAT goes to pay for flights to Dubai to have these meetings,
United Arab Emirates.
Yeah, and actually increase the security of Bitcoin.
Mission accomplished, dude.
Yeah,
or at least a small facet of it. And that's obviously the ambition is to get this to a much further down the scale.
Yeah.
As far as like a market validation scale, so that we can contribute. NAT contributes to a much more systemic degree, right?
Yeah. So if you didn't know, Antpool has moved their earned NAT again and has subsequently sold it again, which is a very positive thing. And so when that happened, so we recorded that video, it was 18 million. If you're watching this podcast, it's 2 days later. It could be higher, it could be lower.
Yeah.
We don't know.
Yeah, we don't know. We do not control the market.
We don't control the future either.
Not at all, dude. We don't have those abilities. We do have some ability, at least to kind of have a little bit of foresight ability to see what the future may behold.
We certainly have some abilities, dude.
You think so?
We have practical abilities, the ability of
sort of
pragmatism.
That's explain. What's a pragmatist?
Looking at problems from the first principles perspective,
which is
breaking down problems to its core issues.
Okay.
Not superficial, not emotional, just objective, verifiable issues.
Removal of bias and such?
Yes.
Yeah, I mean, I think I would say so. So I think, in order for NAT to be what it is, you would have to understand, at least from a fundamental perspective, like why NAT should be doing what it's doing, right? Like how does that serve some sort of, I don't know, net gain, some positive at the end of the day?
Yeah, that's a good question.
Because we could have just left it as is, right?
Yeah, I think NAT as a service to Bitcoin, its product is its market cap.
Explain. I mean, because people like to say that, right, about a lot of things.
Yeah, but yeah, this one hits different.
Okay, explain. Saying a lot of things here that need explanation, and that's going to be like
the crux of this video,
the crux of our life moving forward, dude. We say a lot of things.
Yeah, so
we're saying a lot of things. We're saying a lot of big things, specifically about Bitcoin.
Yeah,
right, which could ruffle a lot of feathers.
Yes.
So
that's
explain yourself, dude. How could you?
Well, Nat asks one simple question, and that question is, how much is Bitcoin's security worth? And so this refers to the idea of its unbreakable power of Bitcoin. So what does that mean? That means that we have a bunch of miners, and we have a list of them here: Foundry, Antpool, VioBTC, F2Pool. We have a bunch of miners, and they are scattered throughout this globe we call Earth, and they are in separate locations. So if you were to send a missile to one of these miners, you wouldn't turn off Bitcoin by just destroying one of these miners. And so that's a good thing, right? That is a pretty robust money where you can't really shut it down, right? That's the point.
Yeah.
So in order to do that, we need the security budget to continuously increase. So what does that mean? Well, that means that if you're a foundry and you're like, hey, we got a pretty good business. We're generating about 300,000 Bitcoin over our lifetime. Like, that's pretty good. It's like, what it would be even better is if we don't rely on our physical existence to be under threat for like an attack, some sort of insider person, or a hurricane or tornado. Like, if any of these things happen, it really challenges our business. So what we should do is we should take some of our money that we've earned and we should diversify and create a new mining facility somewhere else. And so that is what increasing the security budget does. The more money these miners make, the more robust Bitcoin is. And that is what we're trying to do ultimately with Bitcoin. And so my thesis is most people do not understand, or maybe they do. I suspect they don't because I'm not seeing it. But most people don't understand the value of Bitcoin does not come from its market cap or its resource-intensive asset, which it is a component, but it comes from the cost of attack going up. That is why you would want to store your wealth in Bitcoin, because the cost of attack goes up, not down. And so the reason why you want it to go up is because it requires a much more capital, much more energy, much more everything in order to attack Bitcoin. That's why you want the cost of attack to go up. Because if hash power goes down or technology increases at a rate so much faster than the security budget can keep up with, all of a sudden you can attack Bitcoin at a much cheaper rate, and thereby making the store of value narrative moot, because it's better to store your value somewhere else, anywhere else besides Bitcoin.
Right.
So yeah, that is the purpose of the NAT token, is to increase the security budget of Bitcoin so that we maintain the powerful aspect of Bitcoin, which is an uncensorable, unhackable. There's no angle of attack for Bitcoin. That's what you want.
Right. So, what? Why couldn't Bitcoin? I mean, Bitcoin is that, has been that.
Yeah.
But I understand. Yeah, every 4 years the emission of it gets halved. So, and leading up till now, the price of Bitcoin within these 4-year tranches of existence has more than doubled so far. So what leads me or you to suspect that doesn't remain like throughout all of time, right? Like why would that deviate?
So the underlying question you're asking is, why can't Bitcoin be the security budget of Bitcoin itself? Like, why do we need another token?
Yeah.
That's the question.
Yeah.
Okay. So let's say we don't have another token. NAT doesn't exist, and we go down this path of Bitcoin doubling, right? That's the thesis, that we just double Bitcoin every halving, and we should be fine, right? It's like, okay.
So that's, I mean, so the people, because we're not the originators of like painting this security budget crisis. This has been a long-standing concern within the Bitcoin community.
Yeah.
But typically the detractors of it are people who don't even acknowledge that this is a possible problem on the horizon, right? It's like, and they use the past as like a justifying data point to why this won't become a problem, right? It's like an over-exaggerated, dramatized, future hypothetical scenario in order to, I don't know, flood Bitcoin, basically.
Yeah. Yeah. So that means that if we assume that Bitcoin is all you need, first we need to understand like what is the genesis of Bitcoin, and it is peer-to-peer cash. So that means that if you look at Bitcoin, and the founder of Bitcoin, Satoshi, said that on the long-term basis, what's going to sustain Bitcoin post subsidy, or even before that, is fees.
Mm-hmm.
And so, okay, so the question that I have for the audience is Bitcoin being used as peer-to-peer cash right now? Meaning, obviously you can send Bitcoin to each other, and yeah, you can buy some coffee with it over in Venezuela. Yeah, you can do that.
Mm-hmm.
But how often is that happening? Is it high or is it low? So the answer is low. Okay, so if you look at the mempool.
Yeah, but people would say like these things are happening more frequently than you think, but on a sidechain called specifically Lightning Network, right? That's the premise behind it. Why it started 10 years ago as like a development effort from the Bitcoin community. It's like, yeah, we understand the architecture of Bitcoin won't ever allow like the actual original core thesis of it to work out. So yeah, we need a more scalable option.
Did Satoshi do Lightning Network?
No,
he didn't.
Yeah, but I'm sure he postulated on its like existence.
The Lightning Network allows for a ton of transactions and throughput and all that stuff. And yeah, it ultimately gets settled on Bitcoin, but the transaction fees that ultimately get settled on Bitcoin do not match the volume of transactions, because that is the point. You're trying to decongest Bitcoin.
Yeah.
So that isn't a sustainable business model either for Bitcoin. So if transactions aren't happening on Bitcoin, and you guys can go to mempool.space and you can see the current fee right now, it's about 64 cents. We've seen it as low as like 10 cents or below. But if you go and just kind of scroll, you see some blocks that are empty, and it happens every now and then. And right now, I would say that Bitcoin is kind of being used right now, on give or take. But is it being used to the point where this activity right now in the long term is going to be sustainable? Or what if we onboard more than 3% of the world's population onto Bitcoin? Will they use Bitcoin at that point? It's like maybe, but if they do, 100 million transactions on Bitcoin is enough to really congest the chain, and the fees explode.
Yeah,
and then they explode to the point where people have a terrible experience using Bitcoin. So then what do? They use Ethereum, they use side chains, whatever, right, to really accomplish the goal of like buying the coffee, for example. So even if we rely on Bitcoin being a peer-to-peer cash for the world, it is a terrible user experience.
Yeah.
Terrible.
Yes.
So we cannot confidently rely on that. And so, so that means that if we make Bitcoin the only thing that we're concerned about, there's no other tokens, everything is a shitcoin and nothing else matters, only Bitcoin, then we are relying on Bitcoin doubling for every halving for the next 29 times.
Okay.
So this, after 29 times, we're at
why
2140.
Why does that need to happen, first of all?
Because right now, so let's assume that at $110,000 Bitcoin per Bitcoin, that is enough to continue the security of Bitcoin.
And it's like current day state?
And it's current day state, yeah.
Yeah, and that's roughly like around $20 billion annually, something
like that, yeah.
So like that is the current state of monetary value required for it to be like unattackable?
Yeah, so that means that it would require about $20 billion to equal 50% of the total hash rate, right? If you were to spend $20 billion and acquire enough hash rate, you could equal the current hash rate of a zeta hash right now. A zeta hash is a lot of hashes per second, a lot, right?
Yeah.
But you need to acquire a certain amount of hardware to equal a zeta hash.
So what about I mean, there's way more than $20 billion out there today, right?
Yeah.
Like, I mean, you're seeing these AI companies
sling that like chiclets.
Yeah, $20 billion for like one engineer, right?
Yeah.
If I'm Mark Zuckerberg, that's worth it. Why aren't none of these like entities or organizations, attempting to do this?
Yeah, because those individuals acquiring hundreds of billions of dollars are acquiring under the understanding that it's going to be for AI development or whatever. Mm-hmm. No one is raising $20 billion to attack Bitcoin.
Right. So then 100 years from now or 20 years from now, like, why would it be more likely than it is today for these same entities who probably have even more capital by then.
Sure.
As a result of AI proliferation and
Yeah.
complete like market dominance, right? These companies will probably 10x their treasuries.
Not only that, I mean, inflation makes $20 billion a lot cheaper in the future, in
Yeah.
20 years from now.
Yeah.
So $20 billion is not that much money 20 years from now. So now, so what that means is it's actually cheaper to attack Bitcoin.
Mhm.
And so that is under the premise that we understand that Bitcoin doubles every halving.
Yeah.
And so again, in the extreme case that it does that 29 times in a row,
Okay.
if you do the math, you are looking at a $52 trillion per Bitcoin.
Hold on, let me count the zeros here. Yes, I can confirm that is 52 trillion.
$52 trillion per Bitcoin. So what is that? Is that a lot of money? It's like, well, Fidelity predicted $1 billion per Bitcoin by 2038.
Mm-hmm.
So 13 years from now. This is 52,000 times more expensive than Fidelity's prediction. And some would argue $1 billion per Bitcoin, that's kind of ridiculous.
Yeah.
So if that's ridiculous, well, I'll give you ridiculous times 52,000 times.
Yeah, it's weird. It's like what so this is very subjective, right? Like probably in direct correlation to the amount of dilution that you have and that's probably a direct correlation to the amount of Bitcoin that you own.
Yeah.
To be honest, in a lot of cases.
Sure, yeah, absolutely.
Right? The more Bitcoin you have, the more susceptible you are to these delusional outlooks.
Yeah, like a delusion would be, yeah, it's just going to double every halving.
Yeah.
Forever.
Because
so that means that, yeah, Bitcoin is going to be $52 trillion each. It's like, yeah, that's fine.
Yeah. Yeah. By then we've expanded like the entire, again, liquefied all our families and everything, all assets on Earth. And even then wouldn't be enough to cover like probably 1/1000th of that valuation.
Correct. Yeah. So if you do the market cap of 52 trillion per Bitcoin, that's roughly $1.2 sextillion.
Yeah, so then they would come back with, well, yeah, and that in this scenario, there won't be dollars anymore, right? Everything's going to be valued in Bitcoin, so we can just essentially set that value at anything we want, right?
Yeah,
like as a species, I guess.
Yeah, for sure. That's
a new standard of value.
That is what you just said has been distilled down to 1 Bitcoin equals 1 Bitcoin.
Right.
Okay, so perfect. We're in Valhalla, right, guys?
Yeah.
Right? And now 1 Bitcoin is 1 Bitcoin. What's to worry about now? Mm-hmm. It's like, well, in 2140, after that halving is done, how many Bitcoin are miners earning at that point?
Not a lick.
0.
Yeah.
So if 1 Bitcoin equals 1 Bitcoin, what is the incentive to run the network at all?
Well, again, the de facto fallback is by then fees will make sense. Right.
Yeah,
just because now it's the new monetary standard.
Sure. And that is a perfectly fine position to have, but we're onboarding billions of dollars onto the network via these institutions, and 0 of it is hitting the chain. Mm-hmm. And eventually, I think, in my opinion, the store of value narrative is the strongest narrative for Bitcoin, the strongest. Mm-hmm. And so I do agree that is the way that we should take Bitcoin. It's not a peer-to-peer cash. I mean, Ethereum can handle that 100 million times better than Bitcoin, right, with stable coins. Mm-hmm. So I think Bitcoin's position on Earth as a finance tool is a store of wealth. Ethereum is for day-to-day transactions because it's just easier, better, faster, everything. So now, if it is a store of wealth, how many transactions are going to be happening on the network? A lot or a little? A little.
I mean, obviously, yeah, a little. Under this, like, again, a theoretical extension of what's happening today, right? Mm-hmm. Assuming like Bitcoin doesn't hit some sort of inflection point where, in the same sense of gold, right? Like gold is pretty relatively stagnant as far as like an asset, right? I don't think people who've been buying or positioning their wealth into gold over the last like 100 years have been doing that with like an expectation of outsized gains
Sure.
in relation to
Yeah.
other assets in the market.
I
right?
totally agree. If you invest in gold, you are protecting your buying power, not wealth in
Extension.
accrual.
Yeah. Correct. Yeah, that's why typically you look at these wealth managers. They allocate a very small percentage usually to precious metals, gold, whatever.
For sure. Yeah, that's a good thing to do.
Yeah, but it's in Bitcoin it's being proposed as not that. It is number go up only technology.
Well, eventually it will be sort of a protection of purchasing power eventually.
Mm-hmm.
But right now Bitcoin is growing against gold, and that's why the mania, if there was one, is to buy Bitcoin as soon as possible because it is outpacing gold.
Yeah, because we're currently in another inflection point where people are realizing that it is digital gold, right? So yeah, there's a rapid appreciation in value.
Sure, absolutely.
But yeah, at some point it's going to exhaust.
Yes, 100%.
I think that's a safe assumption to make. You can agree or disagree with that, and then again make your own financial decisions as a result of your own independent belief.
And Michael Saylor would argue is like, yeah, even if you get to that point, still Bitcoin will grow at a 15 to 20% compound annual growth rate forever. And that is under the presumption that we still have some sort of stable coin or a dollar unit to gain against, right? That is what you're gaining against. The 20% compound annual growth rate is priced in dollars. But you won't be gaining anything priced in gold.
Right. Okay, so for one, for you to again disregard the core idea that Bitcoin cannot serve as a sole unit of
a solo unit of value. Like you don't need anything else. If that is your position, then what you are telling me is that Bitcoin will be $52 trillion with zero inflation, right? 52 trillion. With inflation, this could be $100 trillion or more.
Right.
So that's what you're telling me. And if you're okay with that, then we're done here, right?
Pretty much.
Okay. Yeah. So, all right, if you're not okay with that, if you agree that that's kind of ridiculous, then what is the solution?
Inflating Bitcoin, right?
Yeah, right. Yeah,
that is a solution that's been proposed.
Correct. Yeah, and that's part of our NATpaper is that is one of the solutions.
Yeah, there's several others. So again, this is not something that's brand new. Topic of discussion. But we've got to introduce something new. I think just to kind of expand like the set of tools. Coming to some sort of consensus and understanding. I think that's what a robust network does, right? Especially one that's as decentralized as Bitcoin.
Yeah.
I don't think there's any one thing that needs to be like the only solution to this problem, right?
Yeah. So what you're telling me is that if the proposed solutions of Bitcoin today aren't good enough, which one of them is to just make Bitcoin infinite, if those aren't good enough, then what is? And so our position here is the NAT token. And so what you're saying is Bitcoin is not good enough. That's ultimately what we're saying here. And I would say, yes, I agree with that. Bitcoin is not good enough. It is not good enough because it's being treated as something that it was designed for something else. It was designed to be peer-to-peer cash, and then maybe you have a shot at sustaining this long term. But it's not being used as peer-to-peer cash. It's being used as a store of wealth. And therefore, no transaction on the network, therefore no longevity. Therefore, store your wealth somewhere else.
Right. Okay, so get into a little bit. Okay, so NAT as a solution, what needs to happen in order for NAT to actually fulfill that purpose, right?
Well, yeah, so I think I said this at the beginning of the podcast, or maybe in the last
video. In the video, I think.
That...
So that's part of why we needed to put out a paper, right? This is not completed.
It's all like 95% there.
Maybe. But yeah, I think definitely above 90%. Like this is, I think it says enough as far as to, addressing the problem. Of course, you can kind of expand on this problem in many different directions just to kind of, I don't know, paint out more hypothetical scenarios potentially that kind of make it a little bit more obvious why that cost of attack needs to be reinforced over time.
Yeah.
So for people to understand like all the different vectors involved in that.
100%. So you said it. The most important thing about Bitcoin is the cost of attack
and the reinforcement of that. Like you don't want it to stagnate.
Correct. Yeah, exactly. You do not want a cost of attack to stay the same.
Yeah, you don't.
You don't want that because, and the reason why you don't, which is very visually hard to explain, but assume the cost of attack is stagnant, meaning let's say $20 billion forever.
Yeah, I think we're going to have a new section after this in this thing because you just said it right there. It's hard to visualize and explain, so we need to attempt that.
Yeah, and so here's why a consistent security budget, $20 billion, is a bad thing, right? Because if it's consistent, we have another component as a vector of society called technology. Technology is inherently deflationary. So what that means is things get cheaper, faster, and better over time, as long as we keep working on it, right? Things don't just naturally just get cheaper and faster and better.
Yeah.
So as long as we work on technology, it gets faster, cheaper, and better, right? So that means that with a stagnant budget, the community of that are supporting Bitcoin have a sunk cost in the hardware that they already have. So they have to spend that budget to maintain the lights already, right? So now that percentage of that budget is already cut into pieces, right? So now they have a marginal budget profit to invest in this new hardware. So what I'm saying, in a stagnant security budget, someone else can say, I understand the dynamics here. I can just purchase a ton of new technological supply to participate in the network or attack the network, right? And so that's why if you keep this consistent instead of growing, someone else can come in and just take your lunch. Because you have sunk costs. You have to like keep the lights on, because if you turn off the lights, the hash power goes down, and then it's even cheaper to attack the network.
Right.
Okay. So now we understand that a stagnant security budget is a bad thing. You always need to increase it. Always need to increase it. So now in this scenario, Nat supplies an additional security budget, and it has an infinite cap of supply.
Yes.
Of capital.
Right.
Okay. Because it's just a market cap. Right. That is the product that we are offering here to Bitcoin.
Correct.
So now we are supplying this pool of sunk cost capital with an ever increasing security budget, right? And so now they can compete with a new state actor to always stay ahead, because they are keeping the lights on. Thereby, there's this minimum hash power, and with this new supply of capital, they're buying cheaper technology, because that's what deflationary technology is. And so now they're always increasing hash power and always front running any potential state actor. And that is the most important factor to why Bitcoin has value, is the cost of attack going up.
I see. So
we need to understand that, and we need to focus energy and innovation to always supplying value to the miners, so that the cost of attack always goes up.
That is interesting. So do you think a part of, part of this is the preservation of existing entities already with like a background history of maintaining, good actor status? Is that part of like the desirable outcome of ensuring that the security budget or the cost of attack keeps going up? Or is that's not so much like part of the course, right?
Well, we see an example already in Bitcoin with F2 pool. So BTC reward is the historical rewards of the underlying party here. So F2 pool historically has earned almost 1.3 million Bitcoin.
Yes.
But it's ranked number 4 in terms of hash power.
Yeah, we know that based on the Nat reward, because this has been
correct. Yeah, so Nat has been emitting to the miners since block 885588.
So less than a year.
So about 6 months or so, give or take.
Yeah.
And so those 6 months represent a snapshot of hash power.
Mm-hmm.
And we know because of that snapshot that Foundry has the most hash power because they've earned the most NAT and therefore at the same time earned the most Bitcoin rewards in that time.
Yeah.
Okay. But you notice here that F2 Pool has earned way more Bitcoin than everyone else on this list.
Mm-hmm.
And the one with the most hash power has earned a total of 300,000 Bitcoin.
Mm-hmm.
So this tells me is that Foundry has been able to acquire enough investment or whatever to take that new pool of capital to buy really cheap technology to support the Bitcoin network.
I see.
And that's what happened here. And F2 Pool, either 100 million different things could have happened here. They just turned off some systems. They're like, these are too old to run. They're not efficient. If we keep these on, we're just losing money. So let's just turn them off.
Mm-hmm.
And like they just lost the hash rate power against Foundry.
Right.
And two others, Natpool and BTC.
Okay, so then like the dynamics of the shuffling between who these pools are, it's not so much like of a concern.
No, not really. Because ultimately this would be a good example of like new parties coming in and supporting Bitcoin network, and with smaller amount of capital, they're able to compete in the hash power race.
So do you think with like a more reliable incentive, through additional subsidies or maybe just different avenues of revenue generating potential for miners themselves within the network, because what we've already seen like a hyper concentration a little bit within these pools, because like you're saying, Foundry, for whatever reason, they're just more capable than the rest of the pack as far as producing efficient hash rate.
Yeah, it could be a number of reasons where they're located on the planet. Because maybe they're located in like Silicon Valley, they have access to capital so much easier, and they just funnel that into hash power. Like there's just so many factors here, right, that play into who has the most hash power. But the NAT token being mined by miners is not to keep miners in business, so to speak.
Right. Yeah.
It is to first understand that Bitcoin's security budget is dwindling, and by 2140, there's literally zero security budget, and NAT has this property tied to Bitcoin's bits field that is always emitting post subsidy.
Correct.
Right, and so there will always be an incentive to mine Bitcoin. So having said that, there's a good reason in mining NAT post subsidy to continue mining blocks of Bitcoin. And the reason why you want to do that is because if miners, again, turn off their systems, Bitcoin becomes this melting ice cube, just like fiat.
Right.
This is not a place to store your wealth if the cost of attack goes down.
Right.
And again, hash power. So hash power and cost of attack is correlated, but is not sufficient to really understand the equation of cost of attack. For example, the core and knots debate is a form of a cost of attack conversation, right? So knots is saying if we support shit pictures on Bitcoin, it becomes harder for you and I to run a node because now we need better hardware, and you and I aren't in a position to purchase better hardware, so therefore we're not going to be a node. And so that's a problem. So now the cost of attack is a little bit cheaper because people need more hardware or better hardware to support the Bitcoin network. Right. So that is part of the conversation.
Right.
And so Core is saying, let's allow this to happen so that there are some fees on the network when nobody else is using the network. Right? That is their version of increasing the cost of attack. So in my opinion, our entire existence as humanity has been a measure of cost of attack. And all this really was inspired by Jason Lowry. I think he put it the best. Like everything is a measure of cost of attack. A bee having a stinger, a lion having teeth and strength, all this is just a measure of attack. Like, you're less likely to go into battle with a lion than you are with a human. With a human, you have a chance. A lion, you got no chance.
What if you got a 30-06 bolt action rifle, dude?
Yeah, that what you described is a projection of power.
Right.
And a lion has a projection of power. Its strength, its teeth, its speed.
Yeah.
You have a gun. So yeah, you can battle a lion under those conditions.
Unless you miss.
Unless you miss and then you're toast.
Yeah.
But again, yeah, all I had to do was visit my local, Dick's Sporting Goods, and I have a shot.
You have a shot. Exactly.
Yeah.
And I think so the projection of power of Bitcoin is its decentralization. It is the fact we have a ton of miners, and those miners are well distributed across the globe.
Mm-hmm.
And that if there's a meteor strike in one part of the planet, hopefully it's small enough, it doesn't destroy the other parts of the planet.
Yeah.
And so no matter what, you always have the money system running.
Mm-hmm.
So that is part of the evaluation of cost of attack.
Right.
So even so in an extreme case, if you have all this power in one location and then a meteor comes, money's done, right? So you don't want that. So yeah, everything is a measure of cost of attack and projection of power. And what we're saying with the NAT token is, in order to project more power, you need more capital. And with more capital, you can get more security by buying additional hardware, creating a new location to mine, things like that.
Yeah.
And really Bitcoiners, Bitcoin maxis, this is really what they want. That's what they want, is to increase the cost of attack. They don't say these things because they don't understand it or whatever, but really the value of Bitcoin is the cost of attack going up continuously.
So you're saying per the nature of the design of NAT in comparison to per the nature of design of Bitcoin, how these assets are emitted and distributed and entered into the circulating pool of governing dynamics of the monetary system, like NAT can be a much more efficient tool to ensure that cost of attack is perpetually in a motion of stably growing over time, as opposed to Bitcoin, which can show either signs of stagnation or deflation or whatever over time.
Yeah.
Per the nature of, again, its design is so long as the current understanding of, the expectation of the value of it doubling doesn't maintain. Right?
Yeah.
Which you're saying theoretically
it cannot.
Yeah, most
maintain.
likely cannot. Is some pretty wild, unrealistic.
And I'll show you a very visual and easy way to understand why it cannot. So if we go to our handy rainbow chart,
Mm-hmm.
you can see what happens in this curve. Right, it just levels off. Right, it doesn't go to infinity; it levels off. There's an asymptote.
Right.
That you approach. And yeah, that asymptote can approach infinity. It can, but eventually you're not earning any more Bitcoin at a certain point.
Yeah, that's for sure. Right. So what do you say to somebody okay, maybe I agree with you, but the idea of funneling value, liquidity, whatever, to some other secondary device, aka NAT, that's for sure ensuring that the primary device isn't getting, whatever that discrepancy of liquidity support is between the two subsidies. It's you're removing that from the original pool.
Sure.
Therefore, it's you're furthering the problem. But again, it depends on perceptions, right? Who is it at the end of the day that needs the support? Is it the underlying holders of Bitcoin itself, or is it the network of miners that are working to secure the value of that
miners every day, dude?
Yeah, you're gonna have a hard time convincing a lot of people. People
not
who
the
hold
miners.
Bitcoin. I know. Yeah.
Not the miners. They're like, dude, we're running the thing. If we're not getting paid to do it, we're not gonna do it. Miners aren't running Bitcoin altruistically. They're not doing that.
Yeah, that needs to be understood. It's a pure economic game theory type situation, isn't it?
Yeah, and we have an example of that with the 51% attack on Monero. and Cubic did an article explaining what happened. They're the ones who attacked Monero. And I'll read this statement here. It says, the Cubic experiment successfully proved incentives dictate consensus. Any proof of work blockchain can be attacked and controlled by providing superior economic incentives to its miners.
Yeah.
This is all you need to know. We have a data point in our existence that proves this.
Mm-hmm.
Now, is one data point enough? No, but there's been plenty of other 51% attacks. This isn't the only one.
Yeah. It's most recent.
Yeah.
Yeah.
So those miners, they're not mining Bitcoin because it's the better money and we're going to save society. No, they're trying to make money and they have a business to sustain.
Right. Okay, I'm in alignment with you, dude. It's like I see.
But your underlying question was, let me go back to the NatGMI site. I slammed it to a $1 trillion market cap.
Do it one more time just for the experience.
Boom.
There you go.
Congratulations, everybody. $1 trillion,
Woo.
right? We've achieved it.
Just all for that confetti. That's what we
just for the confetti, yeah. Man, but imagine that day where it's like it just hits it by itself.
You have to get a bigger slider.
It's true. We're gonna have to amp it up a bit, dude. 10 trillion.
Yeah, probably.
If
but
we're still around by then.
And now let's take a look at the market cap of Bitcoin. And right now it's sitting at 2.2 trillion. So you're saying if we get Nat token to $1 trillion, which that's a pretty healthy security budget if I've ever seen one. And it's so healthy that we are supplying $1 million per block of Bitcoin.
Yeah, which is basically like a 3x from what today is.
A 3x from today, yeah.
Okay, very nice.
So the argument is, well, if we introduce this NAT token, and you're right, you are essentially siphoning value from Bitcoin, aren't you? Right? It's 2 trillion, and maybe in the day that NAT gets to $1 trillion, it's worth 20 trillion or whatever.
What, Bitcoin?
Yeah, Bitcoin's worth 20 trillion.
Yeah.
NAT is worth 1 trillion.
Mm-hmm.
Didn't you just like take away value from Bitcoin when you did that? And my response is, well, let's find another example of an asset that exists on its own. And so the one you asked me this, and the one that I thought of was the United States military.
Okay.
Right? And so the United States military is as big and as powerful as it is because of the money printing ability that the United States has as the world reserve currency.
Mm-hmm.
Because if it wasn't for that ability, the United States military wouldn't be as big and powerful as it is. And so that is a relationship that depends on each other. And you cannot have a military as strong without the ability to print those dollars in a way where, because the military exists, every other country on the planet has to essentially bend the knee to the United States.
Right.
And without that military, if we just printed a bunch of dollars, who do you think on planet Earth would respect that?
Yeah, nobody. It would be as valuable as, toilet paper, essentially.
Sand, yeah, nothing.
Yeah. Yeah, so you're saying equal measures need to be taken in order for the perceptible value of Bitcoin to continue to increase in the same scope of like the perceptible value of essentially the United States.
Yeah.
Has increased over, I'd say, the last century or so.
Yeah. So how do you translate that? What did I just say? The cost of attack to attack the United States is so high that if you did, you will lose.
Yeah, you can't.
That it's just cheaper not to attack. It's just cheaper to kind of bend the knee and just be like, okay, the dollar's a reserve currency.
Mm-hmm. Yeah. To our mutual benefit for now.
Yeah.
Yeah. So what is that budget to preserve that cost of attack from the perspective of preserving that underlying fundamental value of the United States? And again, to preserve this mechanic here, this is dollar issuance mechanic that does have that long-standing authority and positioning within like the macroeconomic landscape.
Yeah.
How much does it cost to maintain that?
Well, Google's telling me it costs $874 billion per year to support the security budget of the United States.
13% of federal spending. So it's going to exceed $1 trillion. Oh, look, by this year.
Yeah, now it's a trillion.
Yeah, I think that cost has to like rapidly
Yeah.
increase.
Yeah, so think about it. Every year you are spending more money on the military budget. And so some would argue it's like, yeah, it's a waste of money. And actually it's not. If it wasn't for this expenditure, you wouldn't be able to get your groceries like you can today, or you go live in a place like Syria where you look up in the sky and you see missiles every damn day.
Right.
Right? This is the cost of freedom, is the ability to be able to do whatever you want to do without this fear of an attack.
Mm-hmm. Yeah, but see, Bitcoin doesn't earn trillions of dollars in revenue.
It's true.
So it can't allocate 13% of its like budget to, reinforcing its cost of attack vectors, meaning like supporting miners with more capital to increase their.
As a matter of fact, we're the United States, just like every other country, they're working on a deficit, so they have to print dollars in order to supply this sort of expenditure.
Yeah,
and so printing dollars is a tax on the planet because it's a world reserve currency, and so things get inherently more expensive, and that's why things feel difficult, even though you can't really just put your thumb on why things are difficult.
Yeah. Well, yeah, you just roped in like a whole bunch of stuff that's not in the white paper right now, right? So it's all that signals to me is we got to go back to the drawing board a bit, right? Because as you could tell, it takes a lot of effort to kind of like really explain the situation. I think a lot more so than just putting together the existing data points, right? Of there is a declining miner revenue.
Yeah.
That's observable.
Yeah.
Right. There is a inconsistent and hyper volatile and very non dependable fee environment on Bitcoin.
Mm-hmm.
Like that data is there and we can present that, which we have. And then there is a concrete cemented state of things within the consensus of Bitcoin itself that makes this subsidy problem persistent with its, per its four-year happening design, right? So all those things are pretty well understood and you could see all that, but I don't know if that alone is convincing enough, right?
Yeah. I think when you boil down the situation with Bitcoin is that the cost of attack needs to continuously go up, and Bitcoin does not have the ability to supply the cost of attack going up forever.
So we need to rethink the dynamics a bit. Rethink. I don't know how we interpret Bitcoin.
It needs to have some sort of symbiotic relationship in ways that a lot of things do. Like everything has sort of a symbiotic relationship. There's like a sort of societal understanding that we should try to get along so that we can go to the grocery store and come back safely. Because if we don't get along, that probability starts to go down. And so that symbiotic relationship is between us and society, is that as long as we are good people, we can safely come back home.
Right.
And so the symbiotic relationship for Bitcoin is sort of missing. The reliance of Bitcoin and its current use case undermines its longevity.
Right. Okay. So again, now NAT is not a theoretical component to solving this problem. It's live. It's out there. There are miners.
There's data points to support what we're saying.
Yeah, at least in its like very infantile stage of,
Yeah, I mean,
it's
ultimately,
maturation, right?
For those who understand this dynamic, we asked them, what is the security budget of Bitcoin? And they're saying 18 million.
Right, and we're saying
that's too low.
That needs to go way up.
Yes.
which presents an opportunity for
Exactly.
a lot of people, right?
Yeah, and you said something interesting, which is, I think, really, really representative of the reality of the situation, and the psychology of how people understand cryptocurrency, money, and incentives.
Mm-hmm.
It's that of the solutions that exist to support this security budget issue, none of them offer the opportunity to get people rich, unlike Nat does.
In the same way Bitcoin did.
In the same way Bitcoin did.
Yeah, in the same way Bitcoin, incepted under a similar framework of understanding a big problem on the horizon, right? And Satoshi's responsiveness to the financial crisis in 2008, that is what led to the initiation of it, and therefore like the aggregation of like-minded participants that wanted to be a part of being that solution. Right?
Yeah.
So Nat has very similar ingredients in that regard, right? People believe in the value of Bitcoin. They see how fundamental it's becoming into like the financial ingrainment of society, and they want to see that further, right? But in order to maintain like an intellectual honesty about that, you have to recognize problems and not just discard anything and just move forward blindly and with your fingers crossed, right?
Yeah. So we couldn't agree more, and we have we call out Adam back here in some of these.
He's one of those guys.
Yeah.
Even though there's tremendous respect for this guy and his contribution, right?
Yeah.
And his participation, and again, like getting Bitcoin to where it is, him and along with others who are pioneers in all this, but still like. And we get it why, like, when he was first informed of Nat, as in the context of this discussion, why his initial reaction would be to discard it.
Sure.
In the context of like everything else that's happened in crypto's past, like, I would naturally assume as well, like this is some sort of architected bullshit narrative.
Yeah. He assumed this bullshit narrative with Bitcoin when, in the early days of Bitcoin too. He scoffed at it as well.
Mm-hmm.
And everybody who learns about Bitcoin for the first time scoffs at it as well.
Yeah.
And so we need to get beyond that and actually look into what people are saying. And yeah, most of the time you would be right to just kind of forget things, because most of the time it's just some shitcoin meme coin.
Yeah.
And then you can just forget about it and your life is pretty much fine. But
Right.
sometimes you do that to something like Bitcoin, and you just miss the biggest opportunity of your generation.
100%. Yeah, so it's why we had to kind of inject in here a section of like fundamental analysis, essentially, in reaction to Adam Back and others. Like we know they're going to instinctually label Nat as an air coin.
Mm-hmm.
It's just another shit coin.
Yep.
And they're going to come with that, with these presumptions of pre-mines.
Mm-hmm. Yep.
There is no fundamental value outside of the realm of Bitcoin. Everything is just
Yep.
a grift attempt, right? So therefore, this is a non-starter, right?
Mm-hmm.
This cannot be the solution to Bitcoin's security budget problems because of those properties. There was well understood properties of crypto,
Of shitcoinery.
of non-Bitcoin related crypto coinery, whatever.
Yeah. Shitcoinery. Yeah.
That's the better word.
Yeah.
So we have to address that, right?
Yeah, for sure.
Which we made the attempt within this paper. It's probably the last thing we're going to get to talk about, right? Maybe we're going to have to do a part 2 next week because there's a whole other section following this.
Yeah. How much time we got left, TJ?
About 5 minutes.
Yeah.
Damn, that went by fast, dude. I was like getting warmed up.
Yeah, we'll keep that for
Keep the energy
for a whole week, dude, and then we can come back and
God damn it.
talk about part 2. But yeah, addressing the fun of, because essentially you're saying the product is the market cap, and in order for things to appreciate and value, there needs to be some sort of consensus and understanding in the fundamental value of this thing, right? And of course, the dynamics between who decides what's valuable or not, it's very subjective, right?
Yeah. Yeah,
It's this magical thing. We call it the invisible hand. And as we know, the market is diverse in its pool of participants and the demographics of human beings that have the capital weight to decide what is valuable or not. So
Yeah.
So from that perspective, it can be approached in a lot of different ways. But if you break it down using first principles, you can come to a pretty like a credible thesis as to why you could assume over time, so long as that initial core movement that again is similar to Bitcoin, right, where Nat addresses a big problem. There's enough people who see that and identify that as something that needs to be addressed.
Yeah.
As long as that like expands, more and more people become aware of that and they become aligned to it. You know, that again, people's capital is that vote of decision. Like, you know, you buy Nat essentially.
Mm-hmm.
If you agree that this is a
100%. Yeah, I mean, if you think that Bitcoin is just going to double every halving, then you either don't understand math or you're intellectually dishonest.
Right.
It's one or the other.
Mm-hmm.
And if you don't understand math, it's okay. But I'm telling you, it's not going to be $100 trillion, you know, with inflation. It's not going to do that.
Right.
Because how do I know that? Because nothing doubles like that. Like, you know that old proverb that if I were to give you like $1 million today, or I double a penny for the next 30 days, which one would you rather have?
What was it again?
It's either I give you $1 million today, or would you rather have a doubling of a penny for the next 30 days? Which one would you prefer?
Take the $1 million, right?
Yeah, but if you take the penny, you would have over $3 million. Or something, or like 30 million, something like that.
By when?
In 30 days.
30 days. Oh, okay.
Yeah.
Sorry. I miscalculated.
Yeah, you double it 30 times.
Okay. Yeah, that's way better.
Exactly.
Sorry, I miscalculated that. I thought it would be like a trick question where it's like, you know, because of inflation, it's like you want to take money now, not money.
No, typically, like if you win the lottery and it's like it's $1 billion. You take $1 billion over 30 years, or you take $500 million today.
Mm-hmm.
You take $500 million today, because over 30 years, that's just a 2x, and you could do more than that in the market.
Buy Bitcoin, or Nat or whatever.
Yeah.
I thought that's you're trying to trick me there.
Yeah, no.
But I get the proverb.
I'm telling you, the doubling effect is exponential, right? That is an exponent. It's very hard to understand what exponential means.
Mm-hmm.
And that in 30 days, a penny turns into like, I forget what it is, like 23 million or something like that.
Right. Regardless, it's more than $1 million, right?
Yeah.
So in 30-day context, inflation can't do a dent in that.
No.
So yeah, you're a fool to have taken the $1 million.
Correct.
That's me.
Yeah.
And I thought it was more like a commentary on like, what was it, that marshmallow experiment where it's like people will take the today gratification, even though they know like in 30 days. Like they might double their money. It's like, fuck that, dude. I might be dead between now and 30 days. Let me take the $1 million now.
Yeah.
And just enjoy that $1 million, right?
Yeah.
That's that marshmallow experiment, right? The kids who took the marshmallow.
Sure.
Wait, what was it? You have a marshmallow. Do you eat it?
So here's a marshmallow. If you just wait 15 minutes, I'll give you a second one, but you cannot eat this one.
Yeah. And the kids who waited, they ended up becoming like
more successful than the ones who
awesome
didn't.
human beings.
Yeah.
And the kids who took the marshmallow right away ended up like drug addicts and gamblers.
Pretty much, yeah.
God damn it, dude. Yeah, so I would have been the kid who just slurped it down, dude.
Yeah.
That's some good marshmallow. And I get to walk out, see you stupid kids who have to sit there for another 15 minutes. I'm out playing my Xbox, you know? Fools. I just went to the store and bought me a whole bag of marshmallows, dude.
Yeah.
You're still sitting there waiting for your second one.
That's right. Yeah, I mean,
it's amazing that these studies happen, right? It's pretty wild.
It is amazing. I think it does measure, you know, the society, like the differences in what people decide to do versus the outcomes.
Yeah,
I think those are very interesting.
I think so too. I mean, you're definitely a 15-minute marshmallow guy.
I'm waiting for the
day.
second one all day. I'll wait all day for the second one. I don't need one right now.
Yeah, you don't want one, period, actually.
No, I don't.
They bring you the second one. It's like, I don't even want that.
No. Yeah.
I just wanted to prove I could do it.
Yeah. Take him back, sir.
Yeah, I mean, I feel like, you could either be for Bitcoin, as most people are, right? People typically like Bitcoin, and be blind to the fact that there is a problem, and not spend any time addressing the issue, which is okay, which is actually fine. You want to know why? Because Bitcoin has a large enough network effect that the immune response will solve the problem for you. And so what we're saying is we are presenting you with a solution and an opportunity that will contribute to Bitcoin being the best monetary asset a galaxy has ever seen.
Yeah. It is a super powerful like reinforcement loop for sure. This whole premise and thesis, value thesis to Nat. Essentially, like the more core understanding of the problem, more alignment and growth of the ecosystem, community, whatever, means the product increases in value.
Yeah.
Which means it's reinforcing the underlying thesis of the utility of Nat, which is providing additional subsidy support to increase the cost of attack. So it's like happening as more people onboard.
Yeah. It's a self-fulfilling prophecy.
Yeah, and that is going to drive new people to understand. It's like, oh, this thing actually works. It's fulfilling in its design and purpose. Therefore, expanding the growth and blah 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 blah.
I could go all day, TJ. Sorry, but think about think about this like small scenario, and we'll cut it after that. This self-fulfilling prophecy you're talking about. So, technology continues to increase. All of a sudden, we crack fusion energy. Fusion energy is essentially taking salt water and creating energy out of it. That's basically what it is. So we have a lot of salt water, therefore that means we have a lot of energy.
Yeah.
And when you have a lot of something, you have a huge supply. What happens to the demand? It goes down, right? So that means that energy gets extremely inexpensive.
Right.
So what does that do to the cost of attack? Now it's cheaper to attack that network. And so let's say we're at $1 trillion market cap on Nat in this given scenario, $1 trillion. And all of a sudden it's cheaper. That means the $1 trillion Nat is undervalued because we developed new technology. So I'm going to buy some more Nat, and others who understand this dynamic, they're going to buy more. It's going to go 1.1 trillion, 1.2 trillion, whatever. And because of this cheaper technology, we've had to increase the security of Bitcoin and therefore make the cost of attack even higher because we've developed new technology to make things cheaper. And so that is the self-fulfilling prophecy that I'm talking about. The better the technology gets, the more security we need, because better technology means cheaper, faster, better.
Couldn't have said better myself, dude.
Yeah.
So I'm very excited for part 2. we gotta start off again dissecting a bit like Adam Back's criticisms, and tell a little bit more about the origin story of Nat itself that kind of attributes to again why Nat has like at least from a fundamentals perspective, like in context of the broader crypto space, it aligns more with the ethos of Bitcoin than everything else. Including like Ethereum even, and like basically every other swash, whatever, of crypto assets that, even Bitcoin maxis may, once they actually learn and understand this origin story to Nat, they would be able to separate the difference between the two. And
I think so.
It should lend some credibility, at least as a starting foundational point to like, okay, continue down this deep dive, rabbit hole discussion, right? Because if you can't even get past that initial barrier of inertia, which that comes with those presumptions of, it's probably pre-mined, there's got to be like some VC involvement here, like every other crypto shitcoinery out there. So therefore it's a non-starter. I don't even want to like pay attention to it. Yeah. So we'll start off with that and then go deeper into, I guess, whatever's left.
Like taking DMT.
Yeah, the DMT pill.
Yeah.
Right. Because again, there's an underlying wrapper to all of this that has, like, from my perspective and point of view, very large implications. Like, not just for Bitcoin, but for all digital assets in general.
Yeah, and I'm assuming people are like, well, you guys just have a bunch of Nat, right? To like talk this up. It's like, okay, yeah, we have some Nat. We don't have not even 1% of the supply. It's not even close.
Yeah, because again,
and even if we did, let's say we had 50% of the supply, right? Let's assume we did. Our arguments are still sound regardless.
Yeah, but still, if you had 50%, I'd be like, you gotta like pass some of that out, dude. A little bit of Robin Hood first, a little Robin Hood action, then maybe I'll listen to your sound proposition.
Just a reminder as well, any NAT that you do have was purchased.
It was.
with your own money.
That's good. It goes without saying because I understand like how Nat started,
But not everybody does.
but
Yeah, that's why we need to detail the origin story a bit for people who don't know, because it is a completely unique origin to in comparison to all other cryptos, right? It's deployed through a brand new framework.
Yeah.
It's first of its kind, and we'll explain that a little bit more in depth. And I don't know, hopefully that doesn't take too long, because if it does, then we're gonna need a part 3.
Part 3? Yeah.
We'll see.
It turns into Fast and the Furious, like 10 parts.
Oh no! Dude.
Can't wait for Nat Tokyo Drift.
The freaking
that's good.
Natpocalypse.
Yeah, dude.
We're gonna have like a chapter at the end that details like when Satoshi resurrects.
Yeah.
Kind of like Revelations.
Let's do it.
Natpolations.
Let's do it.
Jeez.
All right.
Yeah. We'll get there, lads. We'll get to full understanding at some point.
Yeah. So we went through a lot. So I'm assuming you guys have some questions. So join the Telegram. There's 800 of you in there talking about Nat pretty much all day. And so join the Telegram chat. And also, if you have any questions, put it in the comment section below. I want to hear your thoughts. Is the cost of attack what you perceive to be the value of Bitcoin? And if you don't, what is the value of Bitcoin? I'd like to know.
Mm-hmm.
All right. Appreciate you guys for watching, and we will catch you in the next podcast.
Peace.